let's get it right into it today, guys. This is actually the first one is from you, Brian, from Keeping Current Matters about student loans. So don't let student loans hold you back from home ownership. I love the title already. Again, this is on that optimistic slant where a lot of times it's the headlines just trying to get your attention, to get you to, go along with whatever they're about to tell you. But this is one of those optimistic kind of positive pieces where it's like, hey, listen, you can still do that. Here's the data that supports that people in your same situation are already doing that. And I think this is a good one to kick us off with today.
Yeah, so true.
I think this is one of those, obstacles you put in front of yourself whenever you're buying a house. You're like, oh, I can't buy because, I have all this debt. But what I've come to realize is that a lot of these buyers don't understand how the debt is actually looked at by the bank. And one of the things that I encourage people to do is, don't assume you can't buy when you probably can. And what I mean here is that just because you have student loans, it doesn't mean that you're disqualified right off the bat. The lender takes a look at your full financial picture and not just your debts when they're looking to approve you for a mortgage. So this matters because people may self-disqualify themselves before they even get in the fight. So before you even run into that obstacle, make sure you sit down with the professional, have them read your debts, and ask them how the bank looks at those when they're qualifying your debt-to-income ratio for an approval. And what we've come to realize is that, there is the right plan for the right person if you're going about it the right way. And Will, I know you brought up a calculation of how they actually look into the debt. So I'm not too good with my numbers. So, I wanted to see.
Well, me neither. But, I'm glad that you brought this article. I just didn't know 72% of people think that that's going to delay people who have student loan debts. I just didn't realize that.
Yeah, that's a pretty high percentage, isn't it?
That's very high percentage. Obviously you get out of high school, you get out of college, and you're thinking, I have this student loan debt, so I got to pay this off. Because that is a myth. In traditionally speaking, most parents actually teach you that. Yeah, mijo, if you can't afford it, you shouldn't be buying. If you can't buy it cash, don't buy it, right? Which means just leave it alone. But 72%, that's pretty wild.
That's pretty high. And I guess I'm also not too surprised by that but the counter is that 32% of first-time home buyers had student loans. And so the contrary is that even though people may think that it's delaying their ability to buy a house, okay, that might actually be mathematically true too when it comes to applying. But then still 32% of the first-time home buyers, that was last year, had student loans. Yeah. So it's not that it's impossible. It's just another type of debt. Some people got really high car payments too. Yeah. $1,000, $1,500. And, that could even just be for a newer SUV. I'm not talking about some sort of crazy sports car or something like that. But
yeah. And again, it's lack of knowledge, right? You don't know what you don't know. So and I'm glad that we're doing this because when it comes to VA, they have a formula how to calculate the actual debt on your student loan if it's not reflected on the credit report, right? So if the credit report shows you got a $20,000 debt, and the credit report shows no payment, a lot of times they're actually in forbearance because they're using their GI Bill, so they're going to school, so that's not covered. But what people don't know is that you actually get $20,000 and you multiply that by 5%, okay? And then you divide that by 12, and average that's around $83 if my calculations are right, more or less. So your monthly debt for that $20,000 is only $83, which is not too bad.
Right, an equivalent monthly payment value.
Correct.
Yeah.
And then with FHA, they have it at 0.5%. And then that's it. So 20,000 times 0.5%, that is what they calculate.
Yeah.
And same as with Freddie Mac, Fannie Mae, it's 1%.
Yeah. So if you're watching this and you're wondering, oh, I have a student loan, can I qualify? Yes, there's a formula depending on the loan type that will help us generate what monthly payment we have to hit you with as part of your debt to loan, as part of your debt to income ratio, as the expected monthly student loan payment. So even though you may not be making the payment now, they have to assume that if you're getting a 30-year loan from them, at some point in the lifespan of that loan, you're going to end up making a payment, and they need to know what they think you're going to end up paying so they can wager basically measure their risk in that.
Thank you for bringing that up. Well, it sounds like you should be focusing not on the amount of debt you hold, but rather what your debt to income ratio is looking like at the end of the day once you're paying those debts monthly.
And also, I think it wasn't covered in here, but I know there's probably a big contingency of people who were told in 2024, hey, your student loans are going to be paid off. Yeah. And then now in 2025 with the new administration, they're being told, sorry, your student loan payments are back on. So if you are on the fence on that and you're wondering, am I or am I not? Well, you can still go through the calculation with the guys and figure out, even if you are going to have to make the payment back, what's that monthly equivalent so that you can figure out if it helps your qualification or if it hurts you.
Exactly. And here's another thing that people don't know, but we have an IDR, which is, an interest-driven, income-driven ratio. So we're going to figure that out as to what's your income look like. So if you do have $80,000, $100,000 worth of student loan debt, it's going to depend on your income. A lot of these, college graduates, they're actually going and working at Starbucks still because they're probably going to go after a PhD or what have you. And so, there's a way to calculate that formula and you qualify for that. So I've seen it where a person has a $60,000 worth of debt and they only calculate to be $169. That is the dollar amount that we'll use towards the debt to income ratio, which is great. So you got to look at the credit report. You got to see and ask that person if they applied for the IDR.
Yeah.
So just to clarify, so even if your debt is lower through the calculations, you have to go with what the payment if you're on a plan. So the individual plan. So let's say your income-driven plan is higher than if you would do the calculation. Which one would you go based off?
So when you qualify for that, you're going to use the lower one.
Okay.
So a lot of times if you're earning 50, 60,000, then you'll qualify for that.
Okay.
And so therefore, if your payment right now originally is like $800, they'll reduce that, which is pretty awesome.
Nice.
And I've seen that happen quite a bit.
Yeah, that's good to know. And
really
again, that's one of those like lesser known things, but it is just it's part of the process. And we've talked about this a lot this year, which is, look, if you're not even starting the process, you really don't know. You're flying blind and you're competing upstream against people who are prepared and ready, and they're already got their finger on the trigger. So if you find yourself in that position where you do still have student loan debt, you are trying to buy a house and you're not sure, you are actually at step one. That step one is have the conversation, figure it out, do the calculations, and then you know what you got to work on, if anything, or if you can start pounding the pavement and start hunting down a house.
Yeah, the other thing, guys, is there's also a debt forgiveness. I know this new administration is actually pretty strict with that, but we saw back in the years when the Biden administration was around, it looks right here that they approved over $183 billion in debt forgiveness in student loans. So you never know. Go see if they're still around.
Yeah, I know. Put yourself up. Maybe not this year, but in 4 years.
And I believe one of them, an acquaintance, I don't have to say the last name, but Mr. Charles, he had over $150,000, Brian, worth of student loan debt. Get it? He's about my age, so that's a long time ago that he actually graduated, and they carry on this debt. Because a lot of times, depending on their income, they'll just do a forbearance. Hey, I can't pay right now, so forbearance, or they'll sell out the loans and try to refinance it into something else with another student loan, which is also very common. Fast forward into, I want to say this was about a year and a half ago, maybe even 2. That debt was forgiven, $150,000.
Jesus Christ!
All of it.
Yeah.
And the qualification was you were either a teacher in the education field. There was a couple of requirements, more than 10 years, and then that would just be gone.
Mm-hmm. Yeah.
So
yeah, if you met those certain variables, they're like, done, no payment. So
it's crazy.
I think the takeaway here for me is really 2. Number 1, you can buy a house if you have a student loan, and number 2, you don't have to wait. So find out right now. If you don't know, then you need to find out.
Yeah.